Hello students, in the previous lecture I told you how to record a transaction through accounting equation. We did various transactions and we have already done two varieties of transactions affecting opposite side of an equation as well as transactions affecting same side in opposite direction. So I hope you are learning through this particular video. And today I will be providing you the summary table of impact of various transactions on accounting equation. So you will be making this summary table on 1 or 2, 3 pages. You can leave on 2, 3 pages. You will be able to make this summary table, and you can write down these examples on a separate page. So I will be doing side by side transactions and their examples. So let us start with the first transaction. First transaction is when capital is brought in cash. So how this is going to impact your accounting transaction when owner is investing in cash? Yes, so we can write it impact. On one side it will increase the capital, this sign I am using for increase, and on the other side of the equation it will increase the cash. So finally, if you are recording it here, it will be added in capital, also it will be added in cash on the asset side. Now under the same category, if suppose capital owner is bringing capital brought in kind, then what will happen? This will also increase capital along with the increase in assets brought in by the owner. So this will also increase your capital plus increase in other assets. So let us take the examples of this particular case first. Yes, so what will happen? I am taking one example in this. Let us assume that owner has invested rupees 5 lakhs in cash. So owner is investing rupees 5 lakh in cash. So how this is going to impact your transaction? C plus L is equal to A. So as per this, your capital will increase. So you will write 5 lakhs here, and on the other hand this will increase your cash 5 lakhs. So see the impact, equation is balanced. And in this category, second case, owner has invested rupees 5 lakhs in cash and rupees, let us say furniture of rupees 2 lakhs into the business. So how this is going to impact your transaction, this accounting equation? C plus L is equal to A. Now your C will be 5 plus 2. This will be 7 lakhs. And on the asset side, you are having cash plus furniture. How much cash? You will be having 5 lakhs cash plus 2 lakh worth of furniture. So again the equation is equal, 7 lakh on the left hand side, 7 lakhs on the right hand side. So let us study the next case, next transaction, transaction 2, withdrawn by the owner. Again, in first case I am assuming that he is withdrawing in cash. So what will happen if he is withdrawing in cash? His capital will reduce. This will reduce his capital, and on the other hand cash will also reduce. So capital reduce as well as cash reduce. And let us see if he is withdrawing in kind. Suppose he had some sweet shop, or suppose some garment shop is there, then he is withdrawing goods for personal use. Then what will happen if he is withdrawing in goods? So this will decrease capital. Yes, definitely this is going to decrease his capital, and simultaneously stock will also decrease. Let us see the examples for this. Now second example, owner has withdrawn. I am taking a combined example. Owner has withdrawn rupees, let us say 50,000 in cash, and goods worth rupees 10,000 for personal use. So what will happen in this case? His total drawings are 50 plus 10. Total amount withdrawn is 50 plus 10. This is the cost of these goods. So when we write this equation, C plus L is equal to A, we'll write 60,000 will be deducted from capital because these are drawings. And moreover, we'll be reducing our cash by 50,000 because he is withdrawing in cash, and moreover, whatever stock you will be having, your stock will also reduce by 10,000. So the impact of this transaction is same on both the sides. I am taking impact of this particular transaction. I am not connecting this with this. Just then when we complete all these impact of all the transactions, then we'll move to the numericals. So I hope this impact is clear. His capital will reduce by 60. Why by 60? Because 50,000 he is withdrawing in cash, and 10,000 he is withdrawing through goods. So his stock of goods will reduce by 10,000. So total on asset side 60,000 reduction, on capital side, this liability side, 60,000 reduction in capital. So now let us do the next transaction. So let me write here also. This is going to reduce his capital as well as reduce the stock on the asset side. Now let us do third transaction. Third transaction is when he is buying assets, purchase of fixed assets. Then what will happen if he is buying purchase of fixed assets? Now there can be two options. He can purchase on credit basis. Now what will happen if he is buying on credit? On one side there will be no change in capital, but his liability will increase. So there will be increase in liability. Liability will increase. Like for example, suppose he has purchased this fixed assets on installment basis. So the amount, the loan which he has taken will increase his liability, and on the other hand there will be no change in cash, and the value of machinery, whatever he has purchased as a fixed assets, whether it's a machinery or it's a building or land, furniture, software, that will increase. So on one hand his liability will increase because he is buying on credit, and on the other hand his machinery will increase under the category of fixed assets. And second option is he is buying on cash basis. He's paying cash, or he can pay check also. So what will happen if he's paying on cash basis or through check? No change here in capital, no change in liability, but his cash will reduce. It will be deducted from the cash because cash balance will reduce, and moreover it will be added to the asset. Asset can be any, it can be machinery, it can be building, or whatever is given in the numerical. So let us do an example based on this. For example, this is our third example. Owner has purchased a building for rupees, let us say 10 lakhs through check. Then what will happen in this case? When we write C plus L is equal to A, will it increase your liability? No, because immediately he is paying through check. So on this side cash will not be affected, only your bank balance. Bank balance will reduce by how much? By 10 lakhs. So you will deduct your bank balance by 10 lakhs, and a new item, what is the name of this new item? Building. Building will be added with 10 lakhs. Keep in mind that there will be no change in capital, no change in liabilities. So I hope this is clear to you. So now let us move to the next transaction. Next transaction is fourth transaction. Let us assume that owner purchased goods. Purchase of goods. What is the meaning of goods? You all know. Purchase of good means these are the articles in which firm deals. So these are purchased for resale purpose. The main business of the firm is to buy the goods, process it, convert into finished goods, and then sell. Then again buy, process it into finished goods, and then sell. So in this case firm is buying goods. Now there can be two options. These goods can be purchased on credit. So what will happen if these goods are purchased on credit? So no change in capital, because this is not going to affect the capital, but your liability in the form of creditors will increase. So creditors will added on the liability side. No change in cash. Your cash will remain as it is because you are not doing anything, not making any payment in cash, but your stock will increase. So how this is going to affect? Your creditors will increase with the equal amount of stock. So equation will balance. And likewise, suppose he is buying on cash basis, then what will happen if he is buying in cash? Buying in cash means no change in capital, no change in liability. His cash balance will reduce. This will decrease his cash balance, and simultaneously his stock will increase. So this is not going to affect your transaction because both changes are on the right hand side with equal amount. So let us take example for this also. Yes. So this is our fourth transaction example of, you are also making two separate pages, one for the summary table. Here I am not writing any numerical, and another page for example. So fourth transaction, let us assume that owner has purchased goods worth rupees, let us say 75,000 from Messrs. Verma and Sons, and 50% payment is made in cash. So what is the 50%? Here you will have to calculate 50% of 75,000, 50% paid in cash and 50% on credit basis. So this will increase your creditors, while this transaction will decrease your cash balance. So let us see how this is to be recorded in accounting equation. This is our accounting equation, C plus L is equal to A. This is not going to impact your capital. Capital will remain as it is. In liabilities, you will be having a creditor, a new item creditor by 50%. What is the 50% of this? It will be 37,500 and 37,500 here also. So liability will increase by 37,500. And see what will happen to cash. You are paying cash, so your cash will reduce by 37,500. This will reduce your cash. So I am putting this bracket just to show that your cash will decrease. And on the other hand, you will have a stock. How much stock you will be having? You have purchased a stock of 75,000. So 75,000 will be added to the stock. Now see the impact of this transaction. 75,000 add and 37,500 less. So ultimately you are adding 37,500 on asset side and adding 37,500 on liability side. I repeat, on asset side you are adding 37,500 and on liability side you are adding 37,500. So equation will balance. I hope this transaction is clear to you. You can take a separate two transactions also, where one transaction will be related to completely cash purchase, another will related to credit purchase. But I hope you will be able to understand through this example. So it will increase, I am writing it again for more clarity. It will increase your creditors by 37,500 and it will decrease your cash by 37,500 on right hand side, and it will increase your stock, added to stock 75,000. So this is the impact of this particular transaction. So I hope this is clear to you. Now let us move to the next transaction. I hope all these four transactions are clear to you. So we'll be doing all these transactions one by one, maybe in the next 2 lectures. Not necessary that we'll be doing all these in one lecture. So now let us move to the next content. Yes. So next is this is transaction number 5. Yes. Payment to creditors. The transaction is related to payment to creditors. So what will happen when you are making payment to creditors? Again, it can be in cash or it can be through check also, either through cash or through bank. So this is not going to change the amount of capital, because it has nothing to do with the capital, but it will reduce your liability because we are making payment to creditors. So your liability will reduce, decrease in liability, as well as simultaneously it will decrease our cash. And if you are not paying through cash, if you are paying through bank, so it will decrease your bank balance. So either cash or bank. So this will decrease your liability. So creditors will decrease and with the equal amount your cash will decrease. And if not paid in cash, if you are paying through check, then your bank will decrease. So I hope this is clear to you. So let us do example based on this. Fifth is payment to creditors. Let us take this example. We need to pay to creditors 37,500 in cash. So what will happen if you are paying to creditors in cash? C plus L is equal to A. Your liability, your creditors will reduce. So it will be deducted from the capital because your creditors will reduce, and on the other side your it will be deducted from the cash because your cash will also reduce. Now in this case, suppose he is making partial payment through cash and partial through bank. This is also possible. So suppose he is paying 7,500 in cash and 30,000 check. So you will do likewise. So my transaction is, he is paying 30,000 through check and 7,500 through cash. So in this case you will reduce your bank balance by 30,000 and cash balance by 7,500. So I hope this is clear to you, this fifth transaction. Now let us move to the next transaction, and that transaction is very commonly used. That transaction is related to sale of goods. So this is the main revenue producing activity of the business. So what will happen when you are selling goods? See, there will be many options for this, so I am taking all the options one by one. First option is when you are selling your goods for cash at a profit. When you are selling your goods at cash and that too at a profit. So what will happen in this case? When you are selling goods at cash, selling goods for cash at a profit, in this case profit means what? Profit means that you are earning an extra amount over sale price, extra amount over cost price. So when you define your profit, we used to write profit like this. This is cost, sorry, this is sale minus cost. When you are writing your profit, it is sale minus cost. So in this case, firm is earning a profit, and who will be taking this profit? Profit will go to the owner. So in this case, your capital will increase with the profit portion, because your sale includes two things. If I write this equation like this, sale is equal to cost plus profit. So in this case, capital will increase by profit, and moreover, if it is a cash sale, your cash will increase. It will be added to the cash, number one. Number two, it will decrease your stock. Now the point is, now you need to be very careful while recording it, because your cash will increase with the sale price, sale value, but because your stock is always valued at cost or market price, whichever is less, so you will reduce your stock by cost. So stock will reduce by cost. So here stock will be deducting from the stock with the cost price. So I hope this particular transaction is clear to you. So let us take one example based on this for more concept clarity. Yes, this is transaction number 6. So let us assume that sale of goods costing rupees 10,000 for rupees 12,000 for cash. So it's a cash sale. You are selling a goods costing 10,000 for 12,000. So what is your cost price? Your cost price is 10,000, while your sale price is how much? It is 12,000. So you are earning a profit of how much? There is a profit of 2,000. So as per this particular transaction, it will be added in, profit will be added in capital, your cash will increase by the sale value, and your stock will reduce with the cost price. So let us see how this is to be recorded in accounting equation. C plus L is equal to A. So how much profit? 2,000. So your capital will increase with the profit amount. I am writing here profit just for your understanding, and here your cash will increase by 12,000, because this much cash you are getting through sale of goods, and likewise your stock will reduce by 10,000. So if you will be able to calculate the net impact on left hand side and right hand side, you will see that the net effect of both is same. Here you are adding 2,000, and here also you are adding 2,000. 12 plus and 10,000 minus. So ultimately it will be plus 2,000 on the right hand side. So I hope you will be able to understand this particular concept. Now let us move to the next concept under the same heading. Second, you are selling goods on credit at a profit. So what will happen when you are selling goods on credit? When you are selling goods on credit, this will give rise to debtors. Yes, your debtors will increase. And will it be going to change your cash? No, because you are not getting cash. So credit sale means when you are giving goods to your customer on credit basis without taking any money, without receiving any money from the customer. So if you are selling at profit, this will increase your profit, and here there will be no change. Your cash will not be affected, no change in cash, but your stock will reduce with the cost price, and a new item will be added. What is the name of this new item? The new item is debtors. Debtors will be added, and by what amount? With the sale value. So how this is going to affect? This will increase your capital with the profit amount, decrease your stock with the cost price, and increase your debtor with the sale value. So now let us record, let us do example based on this. This was 6th first part. 6th second part, sale of goods costing rupees, let us take different example, 5,000 for rupees 7,000 to Mr. Rakesh. Yes. Now, how you come to know that it's a credit transaction? Because nothing is mentioned about cash, and the name of the customer is mentioned. See, whenever name of the customer is mentioned without any cash detail, we assume that it is a credit sale. I repeat, see what is the basic difference between this and this. Here it is mentioned cash, and here cash is not mentioned. And even if I write here sale of goods costing 10,000 or 12,000 for cash to Mr. Rakesh. This Mr. Rakesh name will be irrelevant here, but here it is very important because for cash is not written. So if cash is not written, we will assume that it is a credit transaction. So it's a credit sale. So how this is to be recorded? C plus L is equal to A. Then 2,000 will be added in profit, added as a profit in the capital, and not your cash will not be changed. No change in cash. No change in cash. And then your stock will reduce with the cost price, and moreover a new item, debtor, will be added. What is the name of this debtor? Mr. Rakesh. So cost price means, what is the cost? Cost is 5,000. So 5,000 will be deducted from the stock and 7,000 will be added to debtors. So this is how we deal with this type of transaction. So let us do the next transaction, next category under the same heading, next variety. For example, you are selling for cash at a loss. Yes, this is also possible. You are selling goods for cash on cash basis but at a loss. So what is the meaning of loss? Loss means, loss is the difference between cost and sale. When cost is more than the sale, then you will have a loss. So what is to be done with the loss? Loss will be deducted from the capital. So you will be deducting your capital, deduct it from the capital. What you are deducting from the capital? You are deducting loss from the capital. So it will be deducted from the capital, number one. Then cash will increase, that because you are selling goods on cash with the sale value, and here sale value will be less than the cost, and moreover your stock will reduce with the cost price, and no debtors because you are not selling on credit basis. So let us take example for this also. Third example under the same category. Third example is sale of goods costing rupees 12,000 for rupees 9,000 for cash. Yes, it's a cash sale. Even if the name of the party is written, but if cash is mentioned, we will say that it is a cash sale. So you are selling goods. What is the sale value? Sale value is 9,000, cost is 12,000. So cost is 12. Sale value is how much? It is 9,000. So firm is suffering a loss. How much loss? Firm is suffering a loss of 3,000. So let us see how to deal with this in this case. So C plus L is equal to A. From capital you will be deducting a loss of 3,000. So we'll put bracket because it's a loss. You can write or it's up to you, but it is better if you mention loss here. And from cash you will be adding how much? You will be adding 9,000 now. Very careful, because sometimes student used to commit mistake because they have this impression that cost price is always less than sale price. So let us take this. No, cash will increase by 9,000, and moreover you are already having stock. Your stock will reduce by 12,000. So what is the impact of this? Final impact, 12,000 minus 9,000 plus. So ultimately 3,000 is reduced on the right hand side and 3,000 is reduced on the left hand side. So I hope this is also clear to you. Now let us do the last transaction today, then we'll move to the remaining contents in the next lecture. You are selling goods on credit at a loss. So what will happen if you are selling goods on credit at a loss? Again same, loss will be deducted from the capital, no change in L, then no change in cash because you are not selling goods on cash, plus your stock will reduce with the cost price and a new item will be added. What is the name of this new item? Debtor with the sale value. Debtor will increase with the sale value. So let us take example here. Fourth example, sale of goods costing rupees 4,000 for rupees 3,500 to Rajesh. Yes. So what will happen in this case? In this case there is a loss of how much? 500. So when you record accounting equation, you will be reducing your capital by 500. Bracket means deducting. So 500 will be deducted from capital. Yes. And no change. Will your cash change? No change in cash. And but you don't write, strike it off. Just for the sake of explanation I am writing, but otherwise don't put this mark when you are actually doing numerical. Your stock will reduce by 4,000 and debtor will increase by 3,500. It will be added to debtor. So finally 4,000 minus 3,500 plus, so it will be minus 500 on right hand side and minus 500 on left hand side. Your equation will balance. So I hope whatever we have done today is clear to you and you will be able to understand this accounting equation better, because in this you have to trace out two items and those two items are very important for the base of accounting, base of journal entries in the further section. So I hope all these transactions, capital, withdrawings, purchase of fixed, here withdrawn by the owner for personal use, you can mention here for personal use, purchase of fixed assets, purchase of goods on cash and credit, payment to creditors, and sale of goods will have 4 different varieties. So I hope this is clear to you. So we'll be doing further transaction the next lecture. So that's all for today. Have a nice day.